Hello and welcome. A very special guest. We've got Prashant Ruia talking to us about where Essar is headed. Plenty of business in your pocket right now, but if you were to pick one that's going to be the group's driver, what would you pick up?
That's a hard one to do because we've got two or three businesses in our portfolio which are looking really strong in terms of growth coming in the next year. Clearly the oil and gas business with our refinery expansion coming on. The steel business where we're seeing huge growth in demand in India, and the power sector where we're seeing a lot of where we're investing heavily to build capacity for India's needs.
Let's talk about energy first. That's again a space that's been much in the news. There are reports about your potential buyout of Shell's UK refinery. What is the progress there?
Well, our discussions with Shell are underway, and we are expecting a decision by the end of February. This is for discussions of a refinery in the UK. It's called the Stanlow Refinery, and nothing is finalized yet. But we do expect discussions for us to arrive at a final decision by the end of February.
What would this Stanlow Refinery mean for the energy business at Essar?
It's very similar to what we have done in the steel business, where we invested in Algoma Steel 3 years ago. We invested in a company which had access to the domestic markets and gave us access into developed markets. So this is very similar in the oil and gas space. This will give us access to the UK markets. It has about little less than 20% market share in the local market.
But why the acquisition? I mean, obviously you're looking at incremental value here on. What part of the business does the Stanlow Refinery help with in terms of retailing fuel? Is that the story? And if so, is it going to be natural gas? What are we talking about?
I think for us the primary investment focus remains India. It's not, in fact, if you look at Essar Energy, the company which we recently listed on the London Stock Exchange, 90% of our investment capex dollars are still going into India.
Yeah.
So in that context, the major driver for us remains India. However, there are certain markets which we would like to have access to, and as I said, developed markets. These are markets where it's not possible to build new capacity because they haven't built a refinery in the developed markets in 25 years.
Right.
So these are markets which, if you want to access, you have to look at it from an M&A perspective, from an investment acquisition perspective, and that's what we are doing with Stanlow.
But just under $500 million odd is what is being talked about?
I'm not possible to give you any numbers, but we are in discussion, and again, we have yet to make a final decision, and that will be known end of February.
Even as you do that, do you think that, as you said, that there's not much of asset that's been added, in the developed world in this space? Would Stanlow be a full stop or a comma in terms of acquisitions of these kind?
I mean, this is really for us in the oil and gas business. This is the first, and it's a discussion which has been on for a while, as you know. I think we'll have to take it as it comes. Let's first see whether we can do something here, and based on the experience and based on the.
So then, for your investor, it's E&P side that you would look at assets or refinery. Is that something clear?
No, clearly, exploration production is an area which we are very much focused on. As you know, India imports 80% of its oil and gas resources. Our oil and gas consumption is growing at about 10% per annum. We are at about 3.5 million barrels a day today, and if you project this over the next 10 years or 15 years, the requirement for oil and gas is substantial, and clearly those needs cannot be met with our own domestic resources. So investment in exploration, production, and in natural resources, oil and gas internationally is clearly one of the main.
Do you have earmarked funding plans on that front? I mean, do you have earmarked amounts of money that you want to put out there in this space?
Yeah, we've not identified any specific number, but Essar Energy is extremely well funded. We do believe that if we want, if there's a good opportunity, then raising the financing may not be a problem for us at Essar Energy. The company is fairly liquid. We recently did a $500 million convertible bond a few weeks ago.
That's right.
A couple of weeks ago. And so funding is really not the issue. The issue is to find the right opportunity.
So this particular bond that we're talking about, essentially what was the idea behind it? The acquisition story or just keeping money?
It was general corporate purposes and some investment into what we are already doing, and yes, some investment into natural resources, whether it's in the case of Essar Energy, it's both our oil and gas and power business. So if you look at coal or oil and gas, certainly that's part of the overall mix. The primary focus of our energy business is to meet the domestic consumption.
Okay, let's talk about steel. Another space, there's excitement there. 2011 looks a bit of a tough year given cost structures out there.
The steel industry is really facing basically raw material supply side concern, and in the case where we have the resources, we don't have access to the resources. There remains cost pressure in the steel industry.
Let's also talk about mining. We're talking about resources. Now, what is Essar's backup plan? I think every company needs a backup plan.
We have a strategy of being fully integrated, backward integrated. We've got fairly substantial resources in the US. We've acquired a company called Minnesota Steel, which is now Essar Steel Minnesota, which has close to 2 billion tons of iron ore resource there. And we've acquired a coking coal company called Trinity Coal.
I think your investors would be curious with the successful listing of Essar Energy in London. What is that meant for the company from an image standpoint? Because we do see that you're making a lot of noise around, but in London, what has this meant for you?
I think it's more from a company image perspective. I think it's given opportunity to international investors to invest in size in the domestic Indian opportunity. If you think about it, there aren't too many Indian companies which are listed on the London Stock Exchange. I think we were the first company to list in many years.
Yeah.
And this was the largest IPO in the last 3 years in the London market.
But you're still selling the India story to them and not really the global push.
Absolutely. The primary, as I said, the primary focus of our energy business is to meet the domestic consumption and the India domestic story.
Okay. Before I go down to steel, I want just one quick question on the retailing side, fuel retailing side. What is the plan there? Because, it's sort of been marred in various troubles, regulatory issues, subsidy issues and all that.
Yeah, I think we're in a tough spot there. We've got it like, obviously the private sector companies would like, and I guess the public sector companies would like retailing to be opened up and deregulation.
Yeah.
That has happened currently in gasoline, in petrol.
Yes.
But on the big items, which is diesel and the other items, clearly it's still very much regulated. And the government is in a tough spot because the price of oil continues to rise, and they're finding it difficult to pass on that price to the consumer. So
it's suffering for a longer time.
I think with prices remaining strong, especially this year for sure, I think it's a difficult decision for the government to make. Okay,
let's talk about steel. Another space, there's excitement there, and there's plenty of international sort of presence as well. 2011 looks a bit of a tough year given cost structures out there.
Yeah, I think the steel industry is really facing basically raw material supply side concern. We've seen significant amount of inflation in our raw material prices, whether it's iron ore, whether it's coking coal, whether it's thermal coal, which is again used for power generation, which is a big requirement in steel. We are seeing huge pickup in prices, and the worrying part is that India does not have sufficient of these resources.
Yeah.
And in the case where we have the resources, we don't have access to those resources. There are enough stories of many projects being stalled currently because they don't have access to either iron ore or coking coal. So, and then on the other hand, internationally, most of these resources are in very few hands.
Yeah.
So you have one outage in Australia which we are facing now, and it has had a severe impact on coking coal prices internationally.
So margin pressures are a given when it comes to steel industry 2011.
Yeah, so the margin is getting squeezed. On the other hand, what we've seen in the last 3-4 months is a pickup in steel prices. So some of that pickup in raw material is getting passed on to the customer, but it's clearly not all of it, and there's going to be there remains cost pressure in the steel industry.
Okay, let's also talk about mining. We're talking about resources. Now, what is Essar's backup plan? I think every company needs a backup plan.
Yeah.
You're obviously looking overseas in a big way. Which geographies, what kind of assets?
So clearly we have a strategy of being fully integrated, backward integrated. So just like in the oil and gas business, in the steel business, the focus is to backward integrate, own our own iron ore and coal resources. We've got fairly substantial resources in the US. We've acquired a company called Minnesota Steel, which is now Essar Steel Minnesota, which has close to 2 billion tons of iron ore resource there. And we've acquired a coking coal company called Trinity Coal, and those are to meet our requirements for our company in Canada. But we have the same strategy in for India, and if we can't get access to resources in India, then we have to invest internationally to secure our raw materials.
Okay, Prashant, we'll take a very short break at the moment and back in a moment with Prashant Ruia here discussing the company's plans and the group's expansion strategy. I have to, of course, start with what is the tussle between Vodafone and Essar. What is your stance?
Our objective, we have a put which is coming up later this year, and our objective is to arrive at a fair market value, on the basis of which we will determine the future of our investment.
But what do you think is going to be the regulatory stance on this? Because we do know that Vodafone wrote to SEBI, right? So, I mean, how is Essar planning to approach it?
I think we've made our stand pretty clear. First of all, it has nothing to do with the telecom business, what we're discussing. And I think we've made out a public statement on this, and I'm not really, don't really want to go into that detail in national TV.
Prashant Ruia, thanks for staying with us through that break. We were talking about mining resources, etc. How worried about policy making are you on this front? I mean, we know Jairam Ramesh's ministry has been holding up projects, but there is an environment concern. Yeah. How would you put the two on a balance?
I think the key issue which we have to really worry about is how is India going to meet its natural resource requirements over the next 10-20 years. And if you think about the total need of natural resources which we need, given that we are at an early stage of development, given that we are currently about a fourth of consumption of China, where they are today, then the requirements which we have is significant. And clearly some of that has to come from international, because we don't have sufficient natural resources. Yeah. And then clearly our regulatory policy has to be such that Indian companies which are willing to invest in manufacturing and make significant investment on the ground do have access to the resources, what is available in the country.
So what is the policy telling industry players?
The policy is, the regulatory policy currently is not very clear. Take steel companies for example. We've been in the steel industry for 15 years, nearly 20 years now. We still don't have access to any iron ore mines. There are many steel companies who are trying to come in and set up projects in India, whether it's POSCO, whether it's ArcelorMittal, and many of us Indian companies who are already here. We still don't have access to iron ore mines. So clearly, I mean, the policy is not, it's not, whatever the policy currently is, we're not getting the end result. And the end result is having access to the resources which are available in the country.
Let's talk about telecom, and I have to of course start with what is the tussle between Vodafone and Essar. What is your stance? I mean, it's seeming pretty bitter.
I think it's very, I mean, as you know, we principally what we are trying to arrive at is in an open and transparent manner, a fair market value for our investment in Vodafone Essar. As you know, we have a 33% stake, and we made a significant investment in the telecom space. We were the one which actually started this company back in 1995. So we've stayed invested in this space over the last 15 years. And we think that there's still a long story out here. There's a growth story in the telecom space going forward.
But what about the allegations?
So I don't want to go into specific allegations, but what I do want to say is that basically our objective, we have a put which is coming up later this year, and our objective is to arrive at a fair market value, on the basis of which we will determine the future of our investment.
But are all these signals towards exercising that put?
No, not at all. In fact, as I said, we believe that we believe that there's a long-term future in the telecom sector. These were the same questions which were asked 3 years ago when Hutchison was wanting to exit, and there were a lot of questions that Essar, we had the option to exit even at that point of time. Right. We've generally been long-term players in most of our investments. I think that's pretty much our track record.
But what do you think is going to be the regulatory stance on this? Because we do know that Vodafone wrote to SEBI, right? So, I mean, how is Essar planning to approach it?
I think we've made our stand pretty clear. First of all, it has nothing to do with the telecom business, what we are discussing. And I think we've made out a public statement on this, and I'm not really, don't really want to go into that detail in national TV.
Okay, let's talk about telecom in general. What's the domestic market telling you?
So, I mean, clearly the market continues to grow. We are continuing to see between 15 and 20 million customers going on a monthly basis. The overall number of subscribers has already outgrown the numbers which we originally predicted. And clearly there is going to be with 3G services which are getting launched now nationwide. Data is going to also become a big part of the telecom story. It's not going to be only voice, it's clearly going to be voice and data.
And was Essar planning in that direction?
No, I mean, we have as I said, we have a substantial investment in Vodafone Essar, and the company continues to grow. We have more than 120 million customers in the company.
Okay. Let's quickly get a sense on the shipping side. It'll be unfair to leave that space. Shipping ports, big infrastructure story for Essar. Again, the expansion strategy.
Yeah, we've been, of course, in the shipping space for close to 30 years, and but what we've done in the last few years is invested much more in the port infrastructure. We felt that there was a big shortage of port capacity in the country, and if India has to grow, then there's going to be a large requirement for very modern and efficient port infrastructure.
Okay.
And that's what we've invested in. We've invested in about 150 million tons of port capacity, which is about 15% of India's port capacity.
What about utilization levels there?
And the utilization, well, some of it is rooted against our own requirements of iron ore, crude oil, etc. And so the utilization levels will be quite high. And then we are also investing in port capacity for third-party infrastructure.
Okay, from a revenue visibility side, shipping looking good?
Shipping, I think, is still going. There's a lot of supply coming on in the form of new vessels. So I still think it's going to be still some more time before we see significant uptake on the shipping cycle.
At Davos, how positive are you, or are you skeptical? What is the headwind?
Well, right now the wind is blowing pretty
now. I know, it's cold, I have to say.
So no, but I think the mood is certainly much better than what it was last year, and I mean, clearly the people generally feel that the US is recovering, Europe is looking a lot better, and the emerging markets continue to remain strong. So overall, I guess the mood is a lot more positive.
I know you fly around trying to convince people to raise a lot of money for Essar. Is the capital flow story continuing? Would it continue even if US makes a comeback?
Yeah, I think the capital flow story in India remains strong. We've obviously had a few blips because of what's been going on back home.
Yeah.
And a lot of that is in the media and in the international media. So that's obviously, put a question mark. But the primary growth story and the primary economy story remains strong. And as long as that's the focus, then I think
Do you have a message for the Prime Minister? A lot of corporations have written to him, and we're talking about the kind of impact that some of this news flows had globally as well.
I mean, obviously, any of this doesn't really help in the international arena. I mean, but as I said, I think the big story is India is clearly in a sweet spot, and as long as we can focus more on that and less on the other stuff, I think we should be fine.
Except the growth story or the non-growth story, what else do you take back from Davos?
I think, I mean, as I said, from a mood perspective, I mean, as I said, business climate remains much more positive, and I think financial capital markets, the most of the people who are looking at from an economic perspective, they see GDP levels coming back. So I think all in all looks
positive. Better. Okay, thanks very much for all that warm talk in this cold climate. Thanks very much.
Thank you.